Hello.
What's happening up there, Scott? Steve,
Hey,
greetings.
Jimmy. Hello. How are you?
Well, here we are once again, another week behind us and another week beginning. It's already July 9th. Wow, how time flies. And boy, what an interesting day it turned out to be today. Um, but before we get into the good stuff, you know what we got to do here real quick is make the lawyers happy. Just want to make sure that everybody in attendance is aware of the fact that we're presenting all this information to you for educational purposes only. If you do need investment advice, how to plan for retirement, whatever, what stocks to buy, what stocks to sell, please seek out a registered investment advisor that can help you with that stuff, or any other licensed individual can help you take care of that. So once again, all of our information, not only in this webinar, but all of our 9 webinars throughout the week, educational purposes only. All right. And of course, for those people who might be, in here for the first time, just want to take a brief moment here to let them know about the community that we've built around the great technology that we have here. It all kind of starts off with Barry's Trading Room up here in the upper left. Barry Anderson is the moderator of our trading room. Does a fantastic job of showcasing his trading style while using our technology simultaneously, right? Big crowd in that room every day. Opens up 30 minutes before the market, and no charge, all right? So if you shopped around trading rooms, you know that any high-quality trading room out there is going to get you for a little bit of a fee. It could be really expensive or anywhere in between, but one of the best things other than Barry about our room is it's a zero cost. All right, so take advantage of that resource if you've not been doing so. Of course, today's office hours, you get myself and Steve. Trade of the week is Tuesday, tomorrow, and that's when Steve takes the helm and Andy rides shotgun with him. Change it up just a little bit, middle of the week. Wednesday, we let you have a little dose from Dan Merkin, the CEO and founder of Trade Ideas, along with our Chief Technical Officer, Brad Williams. Always interesting. Andy's going to round out these 5 p.m. Eastern webinars with the Trading Studio. I'm going to ride shotgun with him on Thursdays. We changed it up just a little bit. We have the Free for All Friday support session starting at 11 a.m. Eastern, and we allocate 3 hours, and typically we use the whole time, just kind of judged by the crowd size there. Crowd size has been doing nothing but going up. So Friday support session, come one, come all, anything TI related. We've also added 4 additional webinars, the TI University series, everything from beginning, which was today, hosted by Sean, I believe. Beginners 101, 201 on Tuesday, 301 on Wednesday, and I do the 401 advanced section on Thursdays. So it is recommended that you take these kind of in order so that you're prepared for the next one and the content's not going over your head. But just another great educational resource that we've recently added to accommodate, our ever expanding client base. All right, get a little taste of Manhattan there. Let's let that fire truck get back here.
You must be on the Upper East Side.
Yeah. Well, everybody, is probably familiar with the fact that we all reside here in Southern California. We've had a nice little heat wave, so I've got all the doors and windows open because my AC decided it doesn't want to work anymore. But hopefully that's coming to an end. It's been a sweaty past few days, I can tell you that. All right, and of course, Holly the AI. Now, original Holly 1.0, was introduced in January 2016, and this is how our client base has responded. We're clearly resonating with the trading community and what we've done with the AI, and the numbers speak for themselves. Of course, we've brought on 2 new AIs as well, so didn't just create Holly and let it rest on its laurels. It's been constant improvement since that launch time, and recently the introduction of 2 additional AIs have made things even more interesting, shall we say, and we'll get into that in just a little bit because one of the Hollies really knocked the cover off the ball today. Before we get into that, though, just want to take the time to point out the ebook that myself, Sean, Andy, and Steve all put together a while back. It's a free ebook. You can pull it down from the address that you see right here, free of charge. This is when we released, the book, and what are you going to go to when the market turns, right? We've had some down days where these techniques showcased in this book, man, right on the money. But you might want to familiarize yourself with all of these techniques before the bear market sets in. We don't know when that's going to happen. We just know it will happen eventually. So it's better to be prepared for that short selling activity than trying to play catch up in the heat of the moment and missing out on a lot of good moves. So download the book, familiarize yourself with it, can do no harm. You know, we kind of got lucky here. Can't say that we did this on purpose, but it is pretty interesting to see, you know, how the market peeled off from that book release. And of course, the people who were early benefited, and there's been other short selling opportunity days where if you've read that book, you know what to do. All right, on to today's agenda. In keeping with tradition, what I'm going to do is pass it over to Steve. Let's hear his comments on the overall indices and, you know, where we've been, where we might be going, all that good stuff. So, Steve, I shall pass it to you right now.
I'll take it. Let's make sure we got the left screen. All right, welcome to my desktop over here. I've got the spiders all kind of ready for you. I'm zoomed out, kind of a 30,000 foot view here to take a look at. I wanted to highlight a couple things that have changed since we last spoke. First off, looking at this from a much broader, longer perspective, I talk a lot about, you know, corrections. Corrections can come in two forms. They can come in price correction, like we had right here, or they can also come in sideways correction. Now, this was a pretty good correction from 286 down to, you know, 250. There's a good, probably there was a good 10% in there, short-lived, and that was a good price correction. But we have failed, or the bears, I should say, have failed in their attempts to roll back over and try and bring new lows to that original price correction. We haven't been able to do it. There's a big attempt here over a couple of weeks, and then another attempt back here. But all we're winding up with here, guys, is higher lows, and we are in kind of a wedge now, which is the new item that I've drawn here. Went ahead and just kind of popped in this little trend line, and on the bottom side, it's the actual 200-day moving average that's kind of acting as the underside of this pie wedge that we're facing here. So if I kind of zoom in a little bit, we can see how the tips of the highs back here, and again, this is where that ebook came out that Jamie was just talking about. We had kind of a premonition it was the right time to launch something like that. But again, there was no follow through. So in the bigger picture here, as I zoom out, we have kind of a sideways correction for the most part. And with that being said, again, with the higher highs bouncing off this rising 200-day moving average, we now have our price after today's action. We gapped up. There was really no attempt to even fill that gap. And we moved higher, but look at where the high end of the range found today. Ran right smack in the middle, right smack into, I should say, that declining little trend line there. So I think this is the current order of where we are right now, where we stand. The rising 200-day bringing up the bottom. And again, the base that we built last week and the week prior was at a very significant level. And it didn't even touch the 200-day moving average this time. So a nice gap up off the weekend, be it a low volume move. We ran right smack into what I think the interest point here to talk about today is this orange line, is this wedge, this defined declining wedge. Will this gap that we created this morning be filled maybe on a minor couple days of pullback? I don't know. It's very possible. But ideally, we've spent, you know, the S&P here have spent 3 good days of green candle energy trying to get up to these levels. And typically, if we run right smack into it, it's not going to cut through like butter. It's going to need a little bit of pullback and rejoining of the troops and building up some more potential energy before maybe a second assault on this. That's one possibility. The other possibility is that I'm full of it and we're going to cut right through like butter and it didn't even matter. That's always a possibility too. But what I'm trying to say here, guys, is the bearish hat should not be worn right now. The market is showing us the path of least resistance remains up. And certainly for today's action in the AI Holly, Jamie is going to certainly touch on the directional bias that we had as well coming from our AI. But just looking at the bigger picture here, you know, this is our next level of toil with the sellers and the supply of stock. Basically the high of today, again, coming right off of the prior all-time high and the most recent high here gives us a nice downward trending trend line, which lines up as kind of a wedge. And again, we didn't pull back too much more in price. We've been going sideways, and now we're looking to push higher. So I really think the path of least resistance remains higher until further notice there. Now we get to the NASDAQ, and we're starting to see, again, where the strength of this market has been. I'm going to leave this line in here because this was a line that we broke through and then tried to hold a couple of days and then fell back under. Well, today, the NASDAQ recaptured that line and has closed above it in spades. I'm going to go ahead and just draw a visual. That is all-time highs, guys. We are that close to all-time highs in tech land. So the NASDAQ is definitely one of the leaders, and on the heels of that, I'll bring up the small cap IWM, also very close to, let's go ahead and mark it up here, all-time highs. Horizontal line, thank you. All-time highs are very close in the small cap. This is the Russell 2000 index, by the way, the IWM. So it's measuring the strength of smaller cap stocks. So what we're seeing, and if we finish up with the Dow, the big Dow is definitely lagging everything else, but still has that same look that the S&Ps are showing us. Let's go ahead and just mark that up as well. Pop that trend line in here so we can see what I'm kind of looking at. I'll put this one up here and this one across that most recent high. So compared to the S&P on a wedge type of a basis here, we still have some work to do in the Dow. So the Dow is lagging, all right? The S&P is right in the sweet spot at that point. But what I'm trying to drive home here is NASDAQ, the technology, giant cup and handle looking pretty solid here. And also the Russell 2000 really very close to breaking out to new all-time highs. Not a reason to be bearish in the slightest, if you ask me. So that's what's been going on. Path to least resistance remains up, as I said. Some of the strong sectors right now are energy. Oil's been having a really nice move, and some of the energy oil stocks are also doing pretty well. Before I hand it back to Jamie, I'll just take a look at the trade of the week. Did not fire today, but I kind of feel like it's going to fire tomorrow. This is a tech stock. It's a semiconductor, so all things should be good to go on the NASDAQ backdrop. The backdrop of the technology sector is strong. So I'm kind of expecting tomorrow we might get a trigger out of this. The blue line is basically just going 2 cents above this red candle back here. We had a nice gap fill on the pullback. So everybody that bought up here wishes they had the opportunity to buy down here. We've got 3 really nice kind of bottoming tails there. So I'm looking at a fish skeleton pattern, which is always good if you're bullish and these are on the downside. Not so in the reverse on the upside. So no trigger, but I kind of feel like tomorrow it's coming. And if it does, hopefully keep an eye on what the semiconductors are doing. SMHs are a good proxy for that ETF. And you can see again today, a little bit of weakness and then nice buying at the close, giving us a bottoming tail here in the SMHs. And so, if the NASDAQ breaks out to new highs, definitely this is the SMHs. Should be the ability to get these SMHs back up higher, and maybe as a whole sector, they might start finding some resistance here around 112 in the SMHs. But again, the only reason I brought that up was because Lattice Semiconductor is part of the semiconductor makeup, and I think it's a pretty nice entry. I've got about 3 or 4 reasons, and I'll go more into detail in depth tomorrow night when it's my turn to host the webinar, and maybe tomorrow I'll have a nice green candle that triggered and pushed up higher. I'll talk a bit more about the genesis of how that trade of the week came about. And that's it. Again, NASDAQ, technology, and small caps, they're the ones leading the way. They're very close to breaking out to new all-time highs, and there's nothing bearish when you start talking about all-time highs in indexes. And that's it.
Good stuff as always, Steve. Thank you very much.
Sure.
Yeah, looks like FANG is back in play, huh?
Could be. We shall see.
Yeah. All righty. Let me flip it back over here. All right. Should be good to go.
There it is.
Yeah. And what a day it was. Of course, as Steve pointed out, we had the gap up and the failure to close and the move higher. That's good news for the bulls, obviously. And then we had Holly Neo today. So Holly Neo, wow, risk on $7.33 on 31 trades, right? Patience is a virtue, as they say. So before we get into picking this activity apart, I'd like to point out some of my indicators, all right, that help me adjust my expectations on every session, right? So first and foremost, we've got the good old compare count windows. These are two separate ones. The bottom one that you're seeing is just anything with a market cap over 4 billion. This one is more geared towards S&P components, right? So just wanted to throw that one up there because I've found it interesting. These guys don't always line up, and I'm still favoring the 4 billion market cap and higher over this one. But you never know until you put them both up there and kind of observe them for a few months. So you can see on the market cap of 4 billion and larger, first 15-minute readings. After the first 15 minutes of the market, I tweeted these out, and we can see the ratio between those capitalized stocks hitting highs with accelerated 1-minute volume versus those cap stocks hitting lows with accelerated 1-minute volume in that first 15 minutes. A nice 57% bias, right? So anything over 50, we perk our ears up. Anything over 55 gets more interesting, right? And we came in at 57 today. And of course, we were coming into a gap up. So, just because we see these readings, especially in a gap up market, we still have to be a little cautious here. But when we, check out the SPY activity here into the first 15 minutes, right? After first 15 minutes, these are 15-minute candles here. What do? We just took a little sideways action, and then boom, pop new highs not too long after that. So what do we have? 15, 30, 45, 50, about an hour, from that point on. We just popped new highs and towed the line and, crept a little bit higher throughout the day. So, once again, what are these windows telling us? Well, the premise being that institutions were buying today, right? And they leave more or less digital footprints in the opening 15 minutes, which a lot of the times can give us a nice indication as to the bias of the market or the overall poll. All right, today was a perfect example of these things lining up nicely and got some follow through. And what I'd like to say about compare count windows is they're really cool and unique, and you're only limited by your imagination, but they're just like any other indicator or study. Sometimes they are good indicators, and depending on the market conditions, they can fail sometimes. But these guys, for the most part, work a lot more than they don't. So if you haven't been watching any compare count windows, whether it be these or any of your own, highly recommend getting some of those up on your screen, because the compare counts are some of the more underutilized modules of the software, but they can be very eye-opening. So really good expectations, really good compare count readings coinciding with market activity today. And now I'm going to put this up. We're going to come back to it in just a moment. What I did is I just enlarged the equity curve for Holly Neo today. Sorry guys, a little frog in my throat. Didn't want to blast your ears with a cough there. So Holly Neo, right off the bat.
That's a real pro for you.
Okay, so we can see Holly Neo started piling into long positions right at the 15-minute mark, which I've seen her go earlier, when some of the sunrise movers, and there's another strategy, I can't remember the name of it off the top of my head, those will sometimes be active after the first 5 minutes. But we didn't have, I believe, sunrise was in here today. Nope. In any case, boy, after the first 15 minutes, she sure did get active. Talk about a directional bias. How many trades here in the first 5-minute period from the time she came active? 1, 2, 3, 4, 5, 6, 7, 8, and 9. All right, 9 longs in that first opening flurry, 5 minutes that she started taking positions, and we can see is mainly the bullish pullbacks, and of course another pullback strategy, strong stock pulling back. So we got very positive compare count readings. We had that basically, reiterated by Holly right at the 15-minute mark. Only 22 seconds after I take my compare count readings, I see Holly Neo, boom, 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 just piling into longs with reckless abandon here. So once again, another good indicator that, you know what, that direction just might be northern today, and that's exactly what we got. Of course, she went to sleep for a little bit here. It took about a 40-minute nap, and then boom, another flurry of activity, and just continuing on until about a little before a little after two hours before the close, about an hour and 40 minutes or so, was her last trade at 11:18 Pacific Standard Time. But man, the the overall total here, and you know, when I saw it up 4, and I'm like, wow, Neo's having a really good day, up 5, up 6, up 7, and really pretty much did what the market did, kind of closed at highs here. So what I'd like to point out here before we get into some of the risk-on trades and the trade-arounds that are always present within Holly, just about on any given day, whether she's positive or negative, is I just blew this equity curve up here a little bit because I wanted to show you, you know, I did a pathetic attempt at drawing a line here. Hopefully in the future we'll be able to resize and manipulate this window a little bit more because, well, what do we see here? In the pylon session, she got a little negative, but that's completely normal. And then, you know, just pretend that we're looking at a stock here, right? Spends its time under here, comes back up, pops that high, and then look, click, 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 right off to the races, right? So keep that in mind as you progress and observe Holly. When you start to see these little patterns, sum it up just like a stock and go, well, when the equity or when her P&L gets through that line, that's when we should start taking notice because we could see here a little clip out of there just like a stock would do, a little pullback, and then it was off to the races. So this can also act, you know, by monitoring this chart, and of course it's not always like this. Sometimes it's all stretched out just like a stock would be, difficult to trade. But when you see this type of activity, this can give you a real clue that things are about to heat up. Those positions are about to start doing their thing, right? So interesting stuff with that little graph today. Could have been a really nice indicator to step on the gas, right? All right, so let's take a peek here and let's look at Holly's, or Holly Neo, I should say, trades. And by the way, the other one's 38 cents for Holly 1. Looks like Holly 2.0 finished up 83 cents, but I mean, wow, 7.33. This also, let me address this as well, because a lot of users say, well, which Holly should I watch, right? Well, good question. Now, my own personal preference, I like the latest and greatest. I pretty much have Holly Neo up all the time on my screen. Michael Noss was in my webinar last week. Actually, it was Thursday because Andy was out of town. So we had Michael Noss get in there and speak about the differences in all the Hollies because he's one of our guys behind the scenes, putting together a lot of the new strategies, very advanced custom formulas and whatnot. So you might want to go back and watch last Thursday's webinar. Really good content by Michael Noss in there about the differences in the Holly, or the Hollies. But bottom line is,
if I go find the link for him and drop it in the chat window to make it super easy for him.
Excellent. Thank you very much. So it's a personal preference, right? Holly Neo to me just seems to be a little bit more progressive. I've been watching Holly Neo, and today it really paid off because, well, she pretty much knocked the cover off the ball today. So let's take a peek at some of the big winners, and of course let's just expand it here because, wow, this is exactly what you want to see on a completed trading ladder. Sure, we're going to have some losers, but they occupy relatively a small amount of real estate versus the winners here. And we can see that Holly maintaining, or doing her risk management as she should. Not a big difference here, 28 cents versus 28 cents, 31 and 32 because of the stop outs, and then 15 cents versus 35 here. Doing a great job keeping her losses intact, keeping them small, not letting things run away because, well, it's easy for Holly because that's what she's programmed to do. She can't look at the chart and go, well, I'm going to give it another dime, right? I'm going to give it another, just down to this last pull, this pivot point. Holly doesn't do that. That's only something humans do. It's not a good quality to have because once we have those hard stops, well, that's what they're there for. We want to stick to our rule set. Now, where we can deviate from Holly's exits is in the capacity that we go risk on. So, of course, if we take a peek over here, Holly playing by her rules with her stops and profit targets and timed holds and her other two options. Sometimes they're good, sometimes they're not, but the reduced risk and the profit save, right? Holly's strong suit are her statistically weighted entries, right? And that's why we like to talk about risk off and risk on, because we can make some calls based on chart activity once we're in that trade, and we can probably do a little bit better on the exits in a position that's working for us, because we can read charts, all right, and we can make sense of certain levels and whatnot. And that's called going risk on. When you see Holly getting out of something that you choose to stay in it based on the chart pattern, that's going risk off. We don't have to pick before the session starts and go, okay, I'm going to play the risk off game today or the risk on game today. It's always a little bit of both, right? For me anyway. So risk on 7.33. Let's take a look at this one at the top here. LYB. 15-minute candles is what we're looking at here, and Holly's entry was right here at the 109.30 mark, and we can see the blue box over here. I don't know if my go-to panel is blocking that, so I'm just going to scoot this over a little bit. But a nice entry there corresponding with the blue box, 109.30. Stop clearly visible down here, which it never even acted like it was going to make a run at. And then, of course, where the stock closed today is the green box. So a beautiful entry. All right, and this is one of the ones that just kind of does its thing. We take a little excursion back down here, but then in the next 15-minute candle, what we do, we go sideways a little bit and just finally get that lift, right? So why is Holly showing a risk-off profit of 0 in this gorgeous trade? Well, once again, she's not the best at exits. She exacted her profit save option here. Mainly due to the sideways action. The longer Holly's in a trade and it's not going the direction, the long's not going up, it's going sideways. So the longer the trade does not do what it's supposed to, there's a certain time decay factor that's going to kick in, and so the logic behind the AI, it's like, well, this isn't working. I've given it an hour here, 15, 30, 45 an hour, and it's not working, so I'm going to go ahead and exercise my profit save. Now, it was probably a few cents in the money, but by the time it closed, right at that entry level again, that's why we're seeing the 0. But risk on, by the end of the day, up $1.24. So when we're in a position with Holly, and it hasn't acted like it's going to go down to the top at all, just getting a little sideways action, there's nothing wrong with that at all. So when we see Holly getting out, we can go, all right, good entry. It's just taking a little bit longer. It's not flirting with the stop at all. I acknowledge that Holly's getting out of the trade, but I'm going to stay in, right? I'm going to stay in, and if you did do that, you could play it two different ways, and it really just depends on your risk tolerance. If we're going to go risk on in a stock that Holly's getting out of, we can A, stick to our original hard stop because that's what it's for, or if you're a little bit more conservative, we can set it to the break-even point. Now, just perfect timing on this one. If we did do that on this one after the bar closed out, boy, if we would have taken our 0 or our flat on the first lot and set stop loss to break even on this one, it almost would have got us, right? And I always typically do mine maybe a penny or two below that level. But this one would have flirted, but even if you used the break even, would have kept you in. So you would have had a flat on one and somewhere between a flat and $1.24 as you rode the momentum northern here. And what I always like to say is, no, you're typically not going to get all of the spread. Every once in a while you will, just like every once in a while, regardless of whether it's a Holly generated trade or not, sometimes we're going to top ticket, all right? If we notice it might be butting up against some nice resistance on the daily, right, which is kind of where this one petered out here, looking to the left here and going back to this little range that started on the 22nd here or the day before. But a lot of the times this can give us an idea of what to expect from the up move, right? So, we're going to top tick some. If it's a short, sometimes we're going to bottom tick them, but that's the exception, not the norm. It's always nice when that does happen, though. So, relatively simple risk on proposition here. And when you're new with Holly, the best way to get used to this process is do a little bit of both, right? If you're in 100 shares, you clip out a 50 with Holly, you keep the other 50, use your stop loss of break even or your original hard stop, and that's the whole name of the game right there. That is the risk on game, is deciding to stay in when Holly's getting out. And let's take a look at BHF because it looks like a pretty similar situation here. Once again, the nice Holly entry signal right here, and boom, just off to the races. Now, the color-coded area right here is Holly's risk off time in the stock. This one also a profit save. Let's see, how close did she get to enduring the hold time here? And we would just look at the bullish back, the bullish pullback strategy here, and we can see that's designed around a 45-minute hold time. So she almost ran the distance there on the hold time. Looks like maybe just a little over 30 minutes. And exercises the profit save once again. You know, Steve, what I just noticed is, why is this profit save bag golden? And why is that profit save bag white? No idea.
I'm looking.
Mm-hmm.
Where's the other one?
Well, the one up top here on LYB.
Oh, yeah.
Is white.
One, okay, both longs, maybe one. No,
I don't know if they're
question.
Anything, but we're gonna have to ask Dave Mabe on that one. I bet it doesn't really mean anything. I bet he just put the gold
oversight.
But I did just notice that. I'm like, what's up? But anyway, BHF, another good example, right? We get the signal, we're in the money, and of course, why I would be prompted to stay in this one is because it just did nothing but go up, right? And when a stock is just going up every 15-minute candle, well, that's a good indicator that you might want to take a little bit more risk. And if we had done that with Holly, if we were in a couple hundred shares and we peel out of the first lot for $32, fine. We set our stop loss either to break even or hard stop. In both cases, no sweat. And then we could have extracted some of the spread between 32 cents and $1.14, right? Maybe you end up picking up another, maybe you make 64 cents on the second one. Maybe you make 70, 80 cents on that second lot. And that really does add up over time. The beautiful thing about using this technique is once you've booked that first profit on the first lot, if you're a break-even type person, well, then you know it's a winning trade regardless. It's a winning trade, yay, and we might just make more on it to a large degree, right? So this is the name of the game right here, just sizing up the chart, the action that's taking place when you see Holly exiting and going, take a little bit more risk here to make a lot more than a little, right? 32 cents, $1.14, that's over 3x. And it just looks, I mean, how similar are the numbers here? 30, 32, $1.14, $1.14. Doesn't really mean anything, just something that we notice here.
A beautiful 10-period moving average.
As we like to say, surfing, that beautiful
surfing
line right there. And as Steve likes to point out, ladies and gentlemen, when you're in a long position and you see well above and the retracements back here and the bouncing and surfing that
sideways action, or it comes up to meet that sideways action, is the best in my book.
Yep. And you know what, Steve, I've been, as I observe the 10 period more and more, when things start to peter out, you notice what they do. They come right here and then they get the little boost and get that trampoline action. So, of course, I'm not a young man anymore, so I'm not trying to, back in the old days, remember we get long and it'd get up to that resistance level, or to us, it was when the seller started coming into the
constantly adding and trimming and adding and trimming. And
yeah, it was so nice to double pop them. I'm long up here at the top, then I shorted, got double your pleasure, double your fun, shorted back down to that level, got long again. But I mean, you really got to be a grinder to embrace that style, which there's a couple of guys out there that use our product that do that, but man, as you like to say, Steve, that's the musical chairs
right
trading. You gotta really have a special skill set. It's like being a gunfighter in the old west. Boy, you better be handy with that steel, because it's real easy to catch a bullet sometimes. All right, so let's take one more look here at a risk on, which is just too juicy to pass up here. WDC, right? Perfect example. Bullish pullback once again. Holly makes a whopping 3 cents on this gorgeous entry here. 78.79. What do you notice? What are we noticing about all these plays today? And this is what you should be paying attention to as well in the thick of it when these things are happening. If you're seeing all these longs, yeah, I missed out on 3 Holly longs already, and you see that none of them are really trying to make excursions down to that stop loss. That is also another very good indicator, so to speak, for lack of a better term, that things are working today. Things are working as they should, and they're not only working, but they're working really, really well, right? So WDC here, she runs the whole gambit here on the timed exit. Of course, bullish pullback, take one more peek here, 45-minute hold time. So, boom. Didn't exercise the profit save, but the timed hold got her out because that's what she's programmed to do. 3 cents. So once again, all we have to do here, once again, whether we used, once we got outside her risk off time, never even touched the entry point again, certainly never came close to here. So once again, using the break-even method, you made money. Using the hard stop method, never even came close, right? I'm more of a fan of the break-even because we're locking in, we're guaranteeing the success of that trade on the first lot, and then we're hoping for more on the second lot. 3 cases in a row here where that would have worked flawlessly using this technique of, I'll do half and half. Later on, once you get more proficient with it, well, then you can start doing full lots if you feel comfortable enough taking that risk. So boom, 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 just 3 really good examples of going risk on with Holly today. Now let's take a look and just check out some of the, what we could say are trade arounds here. Let's take a look at Celgene here. So SCLG, kind of a risk on trade around-ish kind of hybrid, right? No stop out, but Holly makes the entry here. How long was she in this one right here on the Celgene? Yeah, good 12, 30 some odd minutes. Same stock, same strategy, bullish pullback, 45-minute hold time here. Bottom line is ebb and flow, sideways through the entry line. Same logic applies here. Just wasn't doing what it was supposed to do quickly enough, right? So once again, we can still, even though this is a reduced risk, we can still take a look at the chart and apply the risk-on mentality to it. Well, it's not working yet, but I see Holly peeling out of it down 10 cents. You know what? I don't really feel like I'm going to take my 10-cent loser here. I'm going to stick to my stop loss, which is why they're there. And what happens shortly after that, right? We get the lift and a big spread here between negative 10 cents and 40. So we got a 50-cent spread there. So instead of taking a dime loser on that, it's very possible that we could have made 20, 30 cents on that trade. Or maybe, even played it a little bit different way and said, okay, we're going to sit with what we got. If we see it, getting perky and busting these levels, this also would have been a great opportunity to add to a position as this range break is broken, whether you're using the whiskers, the wicks, or the candle bodies, just a personal preference these days. So another example of risk on, but on the reduced risk on the red side of the fence here, very similar to what we saw in BC here, right? There's no need for panic, right? We get in the trade. We know that the buyers, the buyers were active. That's what the chart tells us in the first hour, right? Taking a little break here as buyers and sellers become equal. So once again, no gyrations down to the stop at all. And then what happens? Gathers the strength. The buyers come back out. Then off to the races. Now, a true trade around, in my opinion, is when a stop gets hit, and then we set the price alert for the entry on the second time, and then on the second time it catches. Not a real fiery example of that today. CERN, where it ended up making 8 cents on the stop out. So not a whole lot of good examples simply because of the nature of the market, right? There weren't a whole lot of stop outs comparatively to the remainder of the trade ratio here, which was all green, and a lot of these never even came close. But of course, you're always going to have some that do. So great examples of risk on today and a wide variety of strategy plays from Holly. And of course, with this big fat stack of trades, don't really have a whole lot of time to go into the other one. Let's just take a look at Holly 2.0 real quick, just to satisfy curiosities here. Waiting for the load up here. Okay, there we go. A little sticky here. Interesting, right? Interesting all the time, because some of the bigger winners on Holly 2.0 today were shorts, right? How about that? That's what we like to see. WHD 63 and 81, so played the game pretty well here. Not even quite a 20-cent spread in between that one, much bigger one in the BOVA. But I mean, ladies and gentlemen, in a market like this, where Holly Neo just basically slayed it on the long side, you want something that's not quite as active, not spitting out as many trades, you got Holly 2.0 spitting out some really good short plays in a market like today. So, I mean, this is gorgeous stuff, what we're seeing right here. You want, you're a short person, you like longs. Some people are short sellers no matter what kind of market they're in. That's just their cup of tea. So to see one AI knocking the cover off the ball long, not just knocking the cover off, I mean, that thing went out of the stadium, landed 2 blocks over, right? Some kid sitting in his front yard, a baseball lands. That was Holly Neo today. But then, hey, for something completely different, we've got incredible short opportunities being spit out by Holly 2.0. So from a developer's standpoint here at Trade Ideas, that's exactly what we want to see, right? Exactly what we want to see. I didn't really pay that much attention to Holly 2.0 today, but here you have it, right? So good stuff from all the Hollies today. With the remaining time that we do have here, and I want to keep a close eye on that, not only did we have all of my, indicators in the first 15 minutes lining up to compare counts with what Holly Neo was establishing that bias in the first 15 minutes. Also, with seeing her equity curve or her P&L graph break out shortly after all those positions were piled into. So all lights were green today, right? And then what did we have as well? This window, which is quickly becoming one of my more favorite windows to watch on the open in the first 10 minutes or so, because in addition to all the goodness that was already happening, this guy got started a little bit early today. So here we are looking at, today's activity out of the bullish daily candlestick patterns. And lo and behold, what did I start noticing was coming through these guys today? Well, DO, Diamond Offshore Drilling. We all know that this sector has been heating up. So this guy starts feeding us some oil servicing stocks, right? You got a bank sliding through there. But then really my ears, perked up a lot. XLE, right? Energy Select Spiders. And what we started noticing then is, boom, it was just all over these energy plays today, right off the open. And look what a lot of them did, whether it was the XLE or whether it was Noble Drilling, right? I mean, what a great cherry on top to everything else, right? Spitting out these energy stocks, why? Because of the daily candles that were forming, DO, Diamond Offshore, these bottoming candles right here. I mean, look at that. Consecutive down days, we get the bottoming candle just bouncing off the, I think that's my 50-day up there on the pink, and then whoosh. But then having all of them just spit out right to you, not only the individual stocks, but the actual spider itself, right? And, even if you took this one as a trade along with some of its other components, this was some really good money. This was a day maker right here, right?
Go back to that XLE daily chart, because it looks like there might be more meat on that bone. I just want people to see
right
Nice
here.
tight range. Look at that. We're busting out of that range perhaps today. There could be some follow through tomorrow on some of the energy names.
Yeah, so keep this on your radars, ladies and gentlemen. Might not be a bad idea to just come in here, give it the old right click, set that, break for the energy sector, and we'll see what happens. Actually, just you want to keep an eye on it through the high of today, because that could really do the trick. And then what are you going to have? You're going to have all the components, going right along with it. So interesting stuff happening in the energy sector. Like I said, you could have made your whole day just off these plays early on, and then of course you had some other non-oil related stocks in there as well. Of course, Tesla, if you like that brand of torture. Hey, it worked, but it would have thrown you a lot of pain if you bought it on the open. But that's what we like to see is, hey, the actual tracking ETF, then all the other oil servicing stocks flowing along with it. You got these nice, comfortable formations. Actually, let's not use that one as an example. But these nice, comforting bottoming tails, nudging up to some moving averages. It's just trading is never easy, right? But on days like today, it's just like all the pieces were just falling into place, right? Click, 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 click. And it was a great day on many fronts. And, between what we had coming out of this guy on the open, coupled with the hollies, it's just, if every day was like this, well, too good to be true. And who knows? Sometimes days like this are strung together, just like sometimes as traders, we can string together a nice week. Maybe we had 4 winning days in a row, then we had our losing day, right? Well, just like we can string those days together, it's going to be real interesting as we, start to gyrate on up here on the spiders and get up close to this high. And of course, Steve's always pointed out, this little guy more than likely could be the first one to pop out of there and get some traction. But just keep all this in mind. This window right here, along with all the windows that myself, Steve, Andy, and Sean like as our favorites, can all be found right down here on Channel 4. That doesn't look like Channel 4, does it? There's Channel 4. All the little bitty small squares, because we've got so many alerts, or alert windows, I should say, and compare counts. This is what Channel 4 looks like. Each row is actually they're all just kind of mixed in there. But if you want to grab one, you just right-click, save it to your cloud. That way you can park it wherever you like, put it in your default layout, and have access to all of these windows. So, Steve, great day in the market, great day from Holly, great day from the daily candle patterns, which that little guy's right here, by the way. So you just pop him out and collect him at your leisure, along with any of these other windows that you might want to take a stab at here. So I think that's just about it. Just some really high quality information flowing through the pipes today, whether it was Holly or the bullish daily candlestick patterns, and then even more that I just don't have time to get into now from some of our other bread and butter windows, like the turbo breaks up, no resistance. I mean, that guy was spitting out gold again today as well. So everything was firing on all cylinders today. Quite a Monday to start the week. So having said that, I think we're just about at the end of our time here. So I know Scott's got some promotions going on here. So Scott, if you're ready to walk us out, tell everybody how they can save some money on an upgrade or a fresh subscription.
Yeah, it sounds great. Thank you. A couple items on the way out. Please make sure that you have signed up to get the podcast. So if you are not yet a subscriber to the podcast, search for Trade Ideas Podcast in the application you use to listen to podcasts, and make sure that you are a subscriber to the podcast and get the newest episodes. We've also got a code that's good for the rest of this month. And for this webinar, that's Alpha Wave, all caps. And you're going to use that on checkout to save 15% of your first month or year of Trade Ideas. If you're a subscriber and would like to upgrade to premium, also use that same code, Alpha Wave, all caps. And I guess Jamie's having some slideshow problems where my screen's not refreshing. Hopefully you're seeing that. If you have any questions, email us info@trade-ideas.com. You can follow Steve Gomez at Today Trader, Jamie Hodges at QuantBot. Follow us on Facebook, facebook.com/TradeIdeasPro, and share all of the stuff that we post with your friends. Thank you. We'll have a recording up later on tonight or tomorrow. Thanks, Steve and Jamie. Talk soon.
All right.
Hey, thanks everybody for popping in. We'll see you guys tomorrow. Bye-bye.